Alex asked about bonds, and I want to just really emphasize this point that 3.33 TNX is very important. So this is key for the 10-year. And last week I said that was my price target. In other words, it would fall into 3.33, and then I expected a solid bounce off that level because it's 3 levels of daily support. Let me just show you real quick. So remember this yellow line right here? It's 3 levels. That's actually quarterly. That's a 200-day, and it's a Bollinger Band. So it was going to bounce. Now, what's really, really, really important about this is the formation, at least for me, that is literally a morning star reversal, and it looks like it's going to pop above from last week. It's not a bullish engulfing, but it is a morning star reversal. So it just needs to get above this trend line, and that's really not going to be so difficult, right? Trend lines, they give you kind of an area to support and defend, but they're not the definitive reversal as they really get to see what they're going to do. We're going to see how they're going to perform. But also I have macro to follow this up. So the point is this came all the way down to 3.33. We bounced very strongly on Friday. We also had some selling on Friday. Perfect timing. Also with the $101 tag. Okay. This is the $101 tag. But right here, remember that 101, we hit 100.97. Anyway, this is the dollar, the Dixie. Here's your long trend line from summer. This is on a weekly, this is on a daily. And then we got right back up to this 103 area. It would be very, very shocking if it got above 104. So right now, that's not my baseline bet, but I am expecting the dollar to push, right, and test this area. The bigger area was the bigger move here with this Morningstar reversal on 3 levels of support shows that bonds are going to have a bit of a pullback. And this morning they are, but keep it in perspective. They've been churning around this 106 area like mad, right? Like absolutely just madness. This is the monthly line and it still hasn't gotten above, right? Which is why I've been focused on this. So this is this we're going to call it 109, right? So this is monthly 108.73. Here is the 200-day, a descending 200-day for TLT, which is obviously the inverse of the 10-year yield. And not at all surprising, it's coming down to 103.81. So the same thing. This is just inverse. Remember the TNX on the daily? Well, we've got TLT on a daily. Okay, so you can see this. The difference is that's a Morningstar reversal, so it looks like it's going to get a little bit more punchy. So Alex, I don't know if you're in the room or not, but 3.678, we're going, it seems like we're going to go test that. Okay, and then we'll see what happens. But that's definitely 3.678 would be my baseline bet, which means TLT will very likely come down to this 103.81. We'll see if we even get a little push below it. Guess what? This puppy is moving higher. And that's going to be a very, very different flavor for U.S. yields. Now, U.S. yields are already, in this deflation impulse, right? With the dollar, in other words, they have been falling, right? Since this tippy top here of 4.333, we've come down to 3.333, like literally. All right, so in this 100 basis point drop, we've had lots and lots of sideways though too, trying to figure out, is the backdrop deflationary, inflationary, because the deflationary impulse can lead to an inflationary impulse. And now that's the narrative shift, right? And this is my baseline. Honestly, I said this, we're going to have this for years. We're going to have waves of inflation peaks and equity bottoms, waves of inflation peaks and equity bottoms. I see this going on as a dance for years. It's going to be very tough for investors, which is why investors are going and putting their money in cash. And it's so funny because I was interviewed last week in the Market Watch piece. I talked for an hour about all kinds of things. We chit-chatted too, but the point is that was the one thing she took away. I had no idea what she was going to grab from that conversation. And it's better to stay, cash is a very viable option, right? Earning 4.5%. You see the flyers in the mail all the time, right? So Ray Dalio comes out and he said the same thing this weekend, CNBC, cash is your friend, right? It's better. It'll outperform versus stocks and bonds, which was basically what I said, and not the dollar, meaning this return on cash. And I think it's easy because for him to say, even though he got trashed when he said cash is king and it fell and then it went right back up like a daisy. I think it's very different from his perspective because they're charging 2 and 20 on funds that they lend trading desks all over the world. So there's risk with that. They get 2%, but they also get 20% of profits if they make profits. It was a really tough year for funds last year. So it's actually when I think he's talking his book when he says cash is going to outperform stocks and bonds. Anyway, I think we're going to have a lot of snaking. And I've said that before. And the only thing, the biggest risk that I see is if we break below 3,600, right? I don't have a price target per se of how much we're going to fall this year. I did last year, but I don't for this year. I'm sticking to that still. I think we have another leg down for NASDAQ. I think if the market breaks 3,600 at some point this year, it's not going to get back up for a few years. In the meantime, I'm definitely not bullish all-time highs and higher. I don't see anything in intermarket yet. I do see this momentum rally petering out. It is absolutely caused on massive hedge fund short covering for the record books. Largest option activity last week, largest factor rotation, which is that long short book. Immensely impressive numbers. I think it's not, however, fundamentally driven. Remember this? So I put this level, I said, okay, here's the COVID crash high when everyone freaked out, risk for, safety. And then here was a consolidation period. I said, it would not surprise me if we come down, tag this 101 and then bounce. We did that. And I said at the same time, TNX would hit literally 3.33. It's a 100 basis point drop from the tippy top of August to now. 100 basis point drop right into 3 levels of support, and we moved higher. This is moving higher into 3.678, and then let's see what happens with the rally. So we got a little pullback, at least until then. We have a little pullback with the dollar going into 104, but then that's really important. So again, dollar 104. This is your pullback so far from 101 to 104. Everyone's going to start to get so bulled up in the dollar, but that's a major test because it's already broken down, right? You can see how it's already broken down. So all it's doing is gapping up into the underside of this breakdown. And TNX getting all the way back up to 3.678. 3.678. So you get those 2 levels so far that are so correlated, it's ridiculous. That makes sense? So all we're doing right now is playing a short-term pullback because dollar and yields are rising together, which is a headwind for equities. Let me say it again. We're playing a short-term pullback because dollar and yields are having a short-term bounce. And I want to see if they can get above 3.678 for 10-year and above 104 for the Dixie. In the meantime, you got to be flexible in this little market. And by the way, this is all a dollar trade. Dollar moves higher and you get the, by the way, if you're doing UUP, this is the red line that it above would be very bullish. Otherwise, it's a very big knock on the head kind of thing. So what's the 10-week? 28. So UUP, we're already going to be pushing up to 28, but that was a very nice bounce above. And that was the other level I gave, right? 27.61, a perfect gap and go. So let's see, how much more we get, but this is definitely going to be a dance. So 2807. 2807. Can we get above 2807? Can we get above Dixie 104? It's going to be the test. All right. So the 10-year is up to 3.6, which happens to be on the hourly, sitting above the 50. I would say this price target that I have is probably pretty decent. Remember, it's gotten above the 10 and then fallen before, but for right now, that is a very sharp short-term reversal. Hence why bonds are falling. 105 next, on way to potentially 103.81. TLT is not falling apart. It's just come back down to the 100-day. But the bigger issue is it has not gotten above 109, right? It has, but it has to stay. Needs a little bit more time. I think we have to have the 10-year go a little bit higher. Yeah, we're still not in it. We still haven't hit that 2807 yet. So, and we also have not hit the, this is the 2807 right here. We also have not hit the 3.678, just the dollar futures. I wanted to see what it looked like. Still strong is what it looks like. A little bit why I'm looking at this 10-year run into 3.678 and the dollar into 104. Maybe Powell comes out tomorrow and says something dovish and we get pushed back down. In other words, this deflationary impulse we've had with yields and dollar, which would be market supportive. I don't know what he's going to say. That's all. Better tell is what do we have once the dollar moves up into that 104. Above would shock. And it probably times with Powell tomorrow. We'll probably get right up into it. And then what? Unfortunately, resistance is typically rejection. All right. Anyway, that's it. Watch the 10-year to 3.678 and the dollar to 104.